Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18, and let's focus on the first corporate on our radar now. Indiabulls Housing Finance saw a subdued Q3 with assets under management at a 28-quarter low, and there was a dip in the asset quality performance as well. Interest margin, though, saw an uptick. Gagan Banga, the Vice Chairman and Managing Director at the company, is joining us now to discuss the business outlook and trends as well. Gagan, good afternoon. Thank you so much for joining us. I wanted to understand in Q3, why did the book decline so much? Till last quarter, you were confident of growth as well. What dented it this time? Even your securitized book saw a decline this time. So this is despite the great partnership that you've been seeing. Tell us what happened in Q3 and what are the demand trends or the trends looking like in Q4?
Yeah, so what we've been trying to achieve over the last 3 to 4 years is a complete transformation in our business model. Historically, a large part of our profitability was derived out of the wholesale book, and the retail book created our retail footprint and our franchise, which was catered to by thousands of employees and branches. Today, as we look to scale down the wholesale book, which has been a continuous process over the last 3 years, we are clearly benefiting from the robust residential real estate cycle and the reduction in the book, despite us putting in reasonably large sums of money to complete the various projects which are under construction, which are mortgaged to us, continues to see a decline. So what we've been talking about for the last 3 quarters, given the underlying strong sentiment in the residential real estate market, is that versus the earlier guided fiscal 26 target for completely unwinding the wholesale book, we believe that we should be able to do it over the next 18 to 24 months itself, so about 1 year ahead of schedule. But that would imply that the wholesale reduction would happen at a faster pace, which is why 3 quarters ago we said that the various stakeholders should evaluate our spaces, how we are growing on our retail disbursals. And the retail disbursals year on year are up over 300%. And I expect that over the course of the next 12 months, they would further double from here. So as far as retail disbursals are concerned and our market share on a flow basis is concerned, we are firmly back in the saddle as the 3rd largest. And we continue to add a gap between us and the 4th largest mortgage finance company. So that would continue to be the focus. So I would request you guys as well as the other stakeholders to just look at our retail book separately to our wholesale book and our retail disbursals separately to our wholesale book runoff.
Okay.
The other important point is that we have to calibrate the entire unwinding. As you rightly mentioned, the net interest margin has moved up. We are sensitive to how our return on asset plays out here. And given all of that, we can grow the retail book in a calibrated manner. It can't be that we suddenly start doing 2,000 crores of disbursals, because retail clearly is a lower spread, but at the same point in time, a lower risk business. And the transformation which Indiabulls Housing is trying to do is one where we are moving away from being a capital intensive business, which is what the wholesale business required, to being a asset light business, which is the strategy around our retail business. And the capital requirement reduces from a requirement of long-term capital to just short-term working capital. So it becomes more like a FMCG company or a completely fee-based business as against a heavy capital requiring business, which it has been for the last 10 to 12 years.
Okay. So Gagan, by FY25 end or the beginning of FY26, there will be no wholesale loans in your book, right? You would have completely unwound it.
Yeah, that is the longest that one can visualize. I hope that
it happens.
We're already bringing the target forward by 1 year. I hope we can bring it forward. If the robustness in the market continues, we should hopefully be able to bring it forward by further 6 months.
Okay. So H2 FY24 or end of H1 FY24, Sorry, FY25 or FY25?
Somewhere in FY25, we will surely be done.
Okay. What's the size of the wholesale book right now? And by the end of FY25, when we're sure that the book would have completely run down, what would be the strength of your retail book?
So we are adding retail assets today at a rate of about 3,000 crores a quarter. We hope that we should be able to double that by same time next year. So October to December quarter for calendar 23 should be 6,000 crores and double that again to 12,000 crores, which will bring us by end of calendar 24. We will be back to the levels that we used to be in calendar 18. So it's a range that we've already seen in the past, capacitized for in terms of physical network. We keep adding people and technology, and we get there.
Okay.
As far as the wholesale book is concerned, it is under $2 billion right now, winding down at a rate of about $400 to $500 million a quarter. So at that trajectory, it should take us about 6 quarters or so to completely wind it down.
Okay. Mr. Banga, I just quickly wanted to ask you about your fundraising plans, if any, going ahead, and the declassification of Sameer Gehlot as the promoter. What does it mean for the company?
See, so there have been 3 tracks in which the company has been working. And the most important track from a longer term perspective, given the fact that we were coming off, so in fiscal 19, when we when the IL&FS crisis came and all of that, we had completed 10 successful years or 42 quarters actually of having done a CAGR of 20%. And we were a large balance sheet by any standards with a balance sheet size of about 1.35 lakh crores. And we started the transformation of the business, given the fact that the bond markets for non-conglomerate, non-government type of NBFCs had shut down, and we were a very, very meaningful player in the bond markets. We had as much as 75,000 crores of bonds outstanding at that point in time in fiscal 19. If we look at the transformation of other large balance sheets, for example, maybe in the banking space, if you take the case of ICICI Bank or Axis Bank, etc., when they've transformed, they've had to transform both at the business level as well as at the governance level, and which is starting from the board to the shareholding to the underlying business. And large balance sheets take at least 4 to 5 years to completely transform themselves.
Okay, Mr. Banga, thank you so much.
This process.
Yes. We are very short in time, but thank you so much for joining us today and giving us all those details. It was a pleasure speaking with you. That's the word coming in from Indiabulls Housing Finance. The stock is higher in trade today, but quarter 3 did see some weakness. The split has been explained in terms of the wholesale book and retail business by the management right now. We'll slip into a short break, and up next we'll be joined by Ganesh Natarajan, the chairman at Honeywell Automation India, to discuss their business outlook. Stay tuned.